good morning, good morning. Okay. Hi, guys. Okay, so I have a very, very interesting, exciting TradingView webinar part 2 for you guys today, which hopefully you guys will all enjoy. Today, we're going to focus on the more advanced aspects of TradingView and its integration with Eightcap and its ability to do both proprietary analysis on charts as well as incredibly cool trading on charts. So without much ado, let's just start. Right now, you're actually looking at a chart layout. Now, remember, everything I'm telling you now, in terms of like the advanced stuff, is probably going to be much more applicable to the paid version of TradingView, right? I don't know. I know for a fact that proprietary indicators will work, and I know that you could probably trade on a free trading version of TradingView. But I'm basically assuming if you're going to be really interested in this particular product to its full extent, you should get the basic monthly membership for it, because then you're going to be able to have all the functionality without any problems. So with TradingView, in addition to, let's just hang on a second. Let's just do this. Hang on. Let me just clean this up a little bit. So let's go to just a simple. Okay, here's a simple TradingView chart. I'm going to remove this proprietary indicator, and here's a simple chart of, and let's make it Eurodollar just to be, and actually let's do it. What we want to do is want to make sure that, one of the things you want to make sure is that you want to be using the Eightcap feed. It'll tell you the feed right up here. So here's a Eurodollar Eightcap feed, 1 hour chart. The indicator button is right here. And if you were to click the indicators, right, you can get all sorts of, common technical indicators that you could apply, like Bollinger Bands. This is actually Bollinger Bands. Here's Bollinger Bands. Let's do that. And I've just clicked on that, and you have the simple Bollinger Bands applied on the Eurodollar. You could modify the indicator by clicking in here, right? And you would hit the settings button over here. As you can see you can see the word settings on the wheel. You would click this, and let's say I wanted the length of the moving average to be 40, just for argument's sake. I've actually never extended length of. I wonder what happens. What happens if you do a 40? Wow, that's kind of interesting. That really widens out your Bollinger Bands. That's really interesting. Wow. Okay. So this is actually a 40 period moving average versus the standard 20 period moving average on Bollinger Bands. So you could do all sorts of really, really interesting things with just the simple indicators that the TradingView provides. Another indicator that almost everybody uses, if I were to click in here and I could just simply search for it, is relative strength index, right? I could click that on here, and you can see that that's put on the bottom here in the Eurodollar, and this is the hourly chart. It's kind of trading at the 50 level. You can also, by the way, just to kind of let you know, you could click on this, and you could make it when you go into style, right? You could make it thicker. I'm just looking here to see where's the. You can change the colors. You can change the colors and the thickness of the thing. So let's say I want to make it thick and I want to make it black, just to make it sharper. And you can see how much sharper the moving average, the average is, the RSI is, stuff like that. So there's a whole bunch of free TradingView indicators that you could use to your heart's content. But where this software really, really shines is that people write proprietary indicators for the charts. And it's these proprietary indicators that can be really, really valuable. So today, I'm going to share with you the two primary indicators that we use in our BKForex trading room. One that we use one that we use for trading Forex, and one that I use for trading indices. I'm going to first share with you Kathy's indicator. But before we do that, I'm going to clean this up a little bit. I'm going to show you the process of how a proprietary indicator gets put on a chart. So what happens is, we at BKForex, now if you go into our, excuse me, if you go into our landing page on BKForex, right, all of our, we have a whole bunch of published scripts. Really, the scripts that we are trade with, that we really trade, is a script called Bounce Both Ways, which is the one that I use for indices. And Kathy's, as you can see, we've gone through a lot of different permutations before we settled on really good indicators. And the other script, which is really the bread and butter, called the Zip Trader Heat Map. Okay, and oops, I don't know what I just did there. This is Kathy. So these are really the only two things that we trade now. We had a lot of, as you can see, a whole bunch of stuff that we experimented with, but these are things that we settled on that are just truly robust. So what happens is, in order to get a proprietary private script, usually somebody has to invite you to that script, right? And if you were to join our trading room, you would be invited. You'd be given an invitation to the script. And where that would show up is in your invite-only scripts. You would click on the indicators. There's a whole bunch of folders, right? There's community scripts, there's technicals, there's my scripts that maybe you've written yourself. But you would click into invite-only folders, and you would see that, you see the little green lock means it's an invitation-only access. That you've been granted an invitation to, for example, Zip Trader, which is what I'm gonna run you through first. Now, a simple way to kind of organize your scripts is, if you've been given an invitation, if you click over here, let me just unclick this and then click it. If you click the star, that will automatically put that indicator into your favorites. You can see, by the way, I have a ton of stuff in here, and now it lands in my favorites folder. So I'm going to just simply click on it now in my favorites folder, and you will see this is actually, sorry, this is I have the charts configured for bounce, so it's not quite properly configured. So just bear with me a sec. I just want to I want to give you. Let me see if I can do this the other way. Just bear with me a sec. I'm going to go to my charts. No, I want to go charts. I want to go to run for the O's. Okay, so this is like another indicator that I had here called run for the O's. I'm going to delete that. And so here's the Eurodollar chart, nice and clean chart. And I'm going to add Kathy's Zip Trader heat map over here. Okay. And right away, you see something very cool, right? Wow, like this is not anything you've ever seen. The chart has all sorts of very interesting information that it communicates to you in a visual manner, right? And when it comes to Zip Trader, and obviously I'm going to give you just a very broad explanation of how Zip Trader works. But when it comes to Zip Trader, the basic premise is it's a trend-based strategy based on momentum. And so what you are looking for, in this case, we're going to be looking at Euro here. What you're looking for is a combination or confluence of, this is the signal line, you sort of need three things to make the trade work. You need the signal line, you need the trigger candle, which is demarcated by being white, right? A white candle, to trigger through the signal line. And you want the background, the market regime, to be red. This is for a short, the market regime to be red. So when you have a kind of combination of all three of these things, you would take the trade and it becomes a very, very clean, simple trade, right? Conversely, I'm just looking for strong. You notice that there's sometimes you get 2 out of 3, sometimes you get 1 out of 3. We ignore all those. We only want signals where there is a confluence of the signal line, the white candle, and the supportive background trading. So in this case, here's a good example of a white candle over the signal line, and obviously a green regime, really, really, really positive, right? So that's a nice strong buy bounce, a buy indicator in this particular case. Here's a very, very strong buy indicator. Signal line, white breakout candle, positive background, really, really strong indicator, right? Everybody kind of understands the basic premise of the zip. Yes. Let me see some yeses. I want to make sure you guys are paying attention. So that's a very clean proprietary technical indicator. Now, in Kathy's Forex trading, and by the way, this is a 1 hour, it defaults to a 1 hour chart. It's supposed to be done on a 1 hour chart. The signals are 1 hour driven, right? Now, Kathy doesn't just use this as a signaling service. She combines it with fundamentals. She really looks for a confluence. Does she get a zip signal and a strong fundamental narrative behind it? If that's the case, then she's going to take trades. And she posts quite a lot of her trades on Twitter, so you can follow her on Twitter. But I just wanted to share with you a couple of examples that she shared with me for this presentation. Let me go to full screen view slideshow. Okay, so this is a dollar yen. Okay, this is dollar yen, and again, here, this is obviously your positive dollars, your short yen. She's giving you all sorts of fundamental reasons that particular day, and I guess this must have been today or yesterday, where she was trading dollar yen. But you can see the white candle breaking through the signal line, a green background supporting a positive trend to the upside. Strong CPI, Fed hike, U.S. yield soar. That really was probably the single biggest reason for why dollar yen was going stronger. And of course, she got long here. That was an excellent buy signal on the trade. Here's a short Eurodollar signal. Now, this was post ECB, and look how you have this beautiful confluence of technicals and fundamentals. So you had a very, lackluster ECB meeting. They didn't do anything. They didn't really communicate anything besides the fact they're going to stop QE. U.S. yields were just soaring, which is very negative euro because the yield differential between U.S. and the euro just continues to widen. Fed was expected to hike against a strong CPI. All of this really combined for a very strong narrative story, and the technicals gave you the perfect entry. They gave you the perfect entry right over here to run against that narrative. You can see how the fundamental narrative and the technical entry really is a very powerful combination on structures. So here's Aussie CAD. Now this is you're basically betting on the idea when Kathy trades a lot of crosses. Crosses are a lot more nuanced. The stories in crosses can be very, very interesting because when you're trading crosses, you're no longer really trading the U.S. dollar story. You're trading the relative stories of each one of those countries. Sorry. Let me see if there's any questions here. No. Relative stories of those countries, and of course here you had all sorts of negative Australian news and positive Canadian news. You had basically it's kind of like bad China, good oil. right? To summarize in a very primitive fashion. Yet, lots of problems with China. Oil prices were just going through the roof, 120 to the beat. Canada, Canada is not. People make a big mistake that Canada is like an oil trade. It's really not an oil trade. It's a very, very diversified economy, but it still makes about 20% of Canadian economy is resource based. And the point being is that when oil is at 120, Canadian tar sands just become a very, very valuable asset, especially because it's a safe asset in a industrialized OECD country. So really, really positive for Canada. Canada is really doing well. You can see that you had a zip to the break, to the break side, negative environment, selling here, really, really clean. This was actually, you sold it for 90, 10, and it went 100 point, went almost a full one big figure, which is very, very quite a lot in the cross trade, which is usually a very slow trade. It's really, really strong trade here. Okay, so the final trade is another cross trade, and this is the the New Zealand against the Swissy, right? And here you see what Kathy loves to trade. When you get multiple zip trigger signals, so white candle, white candle, white candle, sort of a very, very negative pressure on the pair against obviously a red background. This is the technicals telling you in multiple ways, danger, 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 or weakness, weakness, weakness on the Canadian front. And here she's telling you the reasons for why, that we had very, very strong risk off flows. When there's risk off flows, when stock markets go down, obviously that's affects risk currencies the most, and New Zealand dollar is very, very affected by the flows in the stock market. So a decline in the stock market. Also, by the way, the Swiss franc benefits greatly from declines in the stock market because it's seen as a safe haven currency. So you have like all these combinations, and you had that interesting move. Okay, so that's the zip trader, and that's a proprietary indicator available only on TradingView, available only from us. Feel free to join us if you'd like to. You can try us out for a week if you want to. You can try us out for a month. You can try us out for a year. We'll give you access to this, and you can trade with Kathy all day long. In her Forex channel for trading Forex. Now, the next proprietary indicator that I wanted to show you was mine. I'm going to go to full screen here, over here. And I trade stock index futures all day long. As a matter of fact, I'll show you. Let me see if I can. I just finished up my overnight session. Let me see if I can pull this up in here. So this is our stock trading room. I trade at 9 o'clock in the morning every day. But this is just my trading in overnight. 195 points in the indices from last night's Asia to just this morning Europe. Using my bounce indicator. So I'm going to show you what my bounce indicator does and how we trade stock index futures. Just kind of explain it to you. So with my bounce indicator, it obviously is a very, very different approach because we're trading the 1 minute chart. We're literally day trading all day long, and we're trading essentially. We're picking bottoms and selling tops, but primarily just always when it comes to equities, we're 9 out of 10 trades would make us to the long side. U.S. equities are a very long biased product. Now, you may say to yourself, look at this downward trend. How could you be buying it? Because we know exactly when to buy on whatever small bounce we can get. And we do that over and over and over again. The reason why we were so skewed to the upside in equities is because the history of U.S. equities is 60% of all days are up, 40% of days are down. It's like trading a 60-40 coin. You are guaranteed to win if you bet long only on a 60-40 bet over a long period of time. And that's what we do multiple trades. It's not, it's not like you're just taking one trade. We're doing 20, 30 trades a day. That's why we're able to have that law of large numbers on our side to be consistently winning every single day in trading equities. But the rules for my setup are actually very, very simple and very clean. Let's get it a little bit bigger so you guys can see it. So this indicator dynamically will create the high of the day and the low of the day. Right now, if the high of the day rises, the line will rise. If the low of the day falls, it will fall. And to sort of make you visually understand that this is a contrary indicator, you can see that the low is painted as green, means that we want to be buyers in this area. The high is painted as red, means we want to be sellers. So just to establish visually that this is a mean reversion, not a trend continuation, but a mean reversion. It's the exact opposite of what Kathy does. We don't follow a trend. We fade it. We counter trend all the time. Now the rules for my setup are super simple. Basically, three things have to happen. We have to have what we call negative strip or positive strip. This is a sentiment strip. And frankly, this is nothing more than that RSI that I showed you. This is the relative strength indicator, but it's now below 30. Whenever it's below 30, it means grossly oversold conditions. So I need to have grossly oversold conditions. That's step one. Step two, I need to have the price hit the bottom, so it hits the lows. So red strike, low hit, and then I need the final component, which is the candle flips from red to green. So my entry would be right over here, boom, and I enter. Now, my bounce protocol is not as simple as all that. That's just trade one. We trade. There's a whole system to this. It's much more sophisticated, nuanced than that. We don't stop. If we're wrong and we get stopped out, we do it again. We do it again. We do it again. We give ourselves ample opportunity to win on every single trade cycle. We don't trade one trade at a time. We trade a trade cycle until a trade resolves positively. And the rules for that require sizing and structure and all sorts of other stuff. And I have a whole free course on how to trade bounce in our BK room. I don't want to bother you with all the details, but I just wanted to sort of show you the simple, elegant structures of what we do, and then show you, basically how those ideas translate into profits. So, in this particular case, I showed you in the US 30, we would go long at that trade, and make money. Now, let's take a look at commodities, which is something that people really like to trade. People love to trade gold, right? In gold, we use the 5-minute chart. The US indices are so fast moving and so incredibly dynamic that they can allow you to trade on a 1-minute chart. For other stuff like gold and oil, we need to use a 5-minute chart. And for currencies, if you want to trade currencies in this fashion, really need to have a minimum of an hour chart. And actually we use the hourly chart, but we use much larger stops and targets on currency. But let me just sort of show you how gold would work in bounce protocol. So here's gold, 5-minute chart. Let's imagine the high was over here, because it was over here. This was the original high, okay? So the way we would trade this is, we have a green strip. You see this little green strip? That means it's positive momentum. It hits the high, and then we have a change of direction from green to red. Now, this is not a great looking red, but it doesn't matter. That's our signal. So we get short here, and we get stopped out because we trade gold with about $1.50 target and $1 stop. So we would just simply get stopped out. Now, once we get stopped out, what happens next? Then we're waiting for the next confluence of signals. So we have a green stripe here, a high here, and here is the next red candle. And we would get short over here. I think it's 28.37. Does that make? I don't think this actually took me into profit. So it's 28.36. I need to see, like, it's $1.50. I don't think it makes like $1.25. Doesn't quite make it. 28.37. I get stopped out at 29.30, right over here, right? So fine, that's my second stop out. Next, I would wait for the red to green, green to red interchange over here. So again, now I get 28.67. I get stopped out again, I believe, right? Is that right? Yeah, I would get stopped out again. So that's attempt 3. Eventually, you would see that, you know, attempt 4, I would probably get stopped out again. Eventually on attempt 5, boom, you know, I make my trade. Now, I think in this particular case, we were just a little bit unlucky. We could have resolved it in 2 attempts, but it doesn't matter. My balanced trading strategy is so incredibly robust. It can go up to 8, 9 attempts before it finally breaks the back of, you know, the shorts, or breaks the back of the longs. In this particular case, we just had a little bit bigger volatility against us, a little bit negative volatility. Like, this trade should have worked right here. It didn't just quite hit. So then we had to work our way patiently from here to, we stopped ourselves here, and then eventually the trade worked. But what you can see is that this pressure of highs and high momentum and highs of the day eventually starts to weigh on the instrument, and the instrument turns. We're basically looking to time the turn. So that's bounce. We trade this primarily, and let me just show you oil as well. So let's see how oil would have performed. So so this is oil in a 5-minute chart. We really don't have anything off the lows. So this would be the highs. Sort of a similar situation with oil. On oil, we like to use a 50-cent stop and a 75-cent target. So in this case, I would be taking this trade. I would get stopped out. And then the second trade in this sequence, you see green to red, you know, green stripe, green to red. I would take this, and that was a nice, easy trade. It just took me 2 trades to resolve that. And so in gold, it took me 4 trades. In oil, it just took me 2 trades to resolve it overnight. In the meantime, in equities, you know, we have 15 to 20 trades a day because we're trading the 1-minute chart, and we're resolving them all the time. And as you can see, everything that I do is traded live. With my algorithm trades it all live. Let me show you. If you guys want to see it. In my private channel here, all the entries, all the stuff, and then, you know, all the results. And obviously, you know, there's a couple. Let me show you where we get stopped out a couple of times. Yeah, here it is. See, I get a negative result, and then a negative result, then we go back in, we go back in, we go back in. And you can see by how many trades. So you can actually see this over here when I posted this on my thing. Where is this? The algorithm will tell you how many attempts it took to resolve profits. So this is 2 attempts, 2 attempts, 1 attempt, 1 attempt, 3 attempts, right? 3 entries to make money. So not, you know, that's actually a really, really good night. As I said, we can go up to 8 attempts to try to make money. And overall, obviously very, very lucrative, 195 points overnight. So that's, you know, if you want to scalp, you can use bounce. But the more important point is that TradingView is what allows you to have this kind of stuff on continuous basis. Somebody's asking me, can you do pending orders in Kathy's strategy if it's in the southern hemisphere during the New York session? No, Paul. Kathy always enters market, but she does an Asia session. So she does a whole bunch of trades. If you want to see, let me sort of, if you're interested, let me just sort of show you. Hang on, let me just pull up my Slack again. Where's my Slack? Oh, what happened to my Slack? This, okay. So here's Kathy's signals, right? And you could see, let me just come back to you. This was, let's look at the, This is all stuff that she did. So this is overnight stuff. This is to you would be morning. So when did she post this? Let me just, everything is time stamped in New York. This is New York, right? This is New York time. It's 1931, 100 hours New York, which means it would be 7:31 in Asia in the morning, or if you're in Australia, I think that's like 11 o'clock in the morning in Australia. So there's a whole Asia session of stuff, and then actually she wakes up in the morning and she says, oh, look at this, all the trades hit, all the trades hit, all the trades hit, right? So you don't have to trade the New York session. She does an Asia session and a New York session. That's what makes it so much easier to trade. Okay, so I've shown you the kind of beauty of the proprietary indicators and how valuable they are to our own internal trading. But what's really, 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 really cool is that we have a way to integrate. So let me, before that, here's a Eightcap trading account that I have, right? You guys seeing this, right? And let's just do a Eurodollar trade. Okay, let's just do a Eurodollar trade. So let me just make sure I get this. Sorry, I need to make sure that it's sitting on Eightcap. Okay, here's a Eightcap Eurodollar trade on a 5-minute chart. Doesn't matter, right? So you can trade directly from TradingView charts. So let's say I wanted to click on this, right? Did I just buy myself market? Yes. So you can see I clicked on the buy button over here. I put myself long euro. But here's what you notice. You notice that there is no take profit, no stop loss, which means that I have to now go and to protect the position. I have to put a take profit of, I don't know, 10 pips. It's 100 points, right? And let's say a stop loss of 10 pips, which is another 100 points. And I would have to modify that and hit that. And, it all takes time. And sometimes you forget it and it's really annoying, and, so on and so forth, right? And then if I wanted to close it, I'd have to hit this X button, and, then it all closes out. And then, then if I wanted to place it again, I'd have to get my price and put it into take profit to put in the stop. So the point being is that it's possible to trade from the TradingView charts, but it's inelegant, it's kind of slow, and it's also very, very limiting. So what we did is we created a special, and let me see if I can pull this up to you guys. Yeah, here we go. So this is MetaTrader 5, which all of you, so by the way, if you're trading through TradingView, you need to have a MetaTrader 5 account, right? You need to have a MetaTrader 5 account. So we decided we're going to create an absolutely free Eightcap trading tool that can do a whole bunch of things super fast and super easy for you, that will then allow you to trade on TradingView charts. And so I'm going to, let me just drop the Eurodollar on here. So I'm going to trade Eurodollar, okay? So here's Eurodollar on my MT5 TradingView charts. Now, I'm going to do something very, very simple and very easy to show you. This particular applet has a whole bunch of functionality that can give you incredible amount of flexibility what you want to trade. Let's just, for argument's sake, you say to yourself, I want to trade just $10,000. And by the way, if it's Australian dollars, it will do it in Australian dollars. If it's Singapore dollars, it will do Singapore dollars. This is, in my account, this is in US dollars. So let's say I want to trade $10,000 worth of Eurodollar, right? It will automatically, you see how it automatically sizes up from dollars to lot sizes. Now it's a 10-point lot, right? And I want to trade it with a 200-point stop, and maybe 100. Maybe I just leave it a 40-point target, four pip target on the first and a 20 pip target on the second, right? Now watch what happens. So I set this up. I'm going to hit the buy button. And I'm instantaneously in the market. And I'm in the market with a stop and a target, and my whole position is in there. But here's the cool part. Look what's happening. That trade now is fully manageable through MT5 on TradingView. So that is the really neat part. You can essentially use TradingView, MT5 to adjust your trade with TradingView. Now, what I've done right now is I have actually, what's my take profit? What is this? 104. I'm sorry, hang on a second. Let me just make sure I did this right. My take profit. Oh, it's this is in 200s. So my take profit, I'm going to put this to 1. I've just put my take profit to 1 pip. And what this thing is going to do is if it goes to 1 pip positive, right? Let's see if it does. It will sell half my position and automatically go to break even. Let's see if we can get the 1 pip positive. Oh, 9/10 of a pip. Come on, baby. It's always problematic to do this in live markets. But let's just see if this rallies. Nope, just missed my take profit. By the way, I could make it to like even a half a pip. I can do it like this, right? I can set my target to half a pip. Let's see if maybe it'll rally for me for half a pip. Oh, come on. Nah, just teasing me. I wanted to just sort of show you this principle. Okay, I guess it's going to go away. So doesn't matter. I can close it. You know, I can close my trade over here. And now the whole trade disappears off the charts. And now you see I have nothing on my TradingView charts, right? It allows you to essentially manage your TradingView directly from MT5 in you know full ability. Let's do this again. I'm going to buy it again, and let's see if I can. I'm not getting any. So okay, I'm going to do the old trick both ways. So I'm going to do chart window. We're going to do new chart. I'm going to do the old cheating method here. Just bear with me. So I'm going to put the my trading EA on here. Where is it? Okay, we call it trader EA, and I'm going to. Oh, sorry, it actually did it. While I was waiting, you see how? Did it? No. I take it back. Hold on a second. No, it's still negative. Okay, hang on a second. Let me close this up. Let's do it this way. We're going to do it side by side. So we're going to do it side by side. I just want to show you the principle of the ability. So the first take profit, I'm going to do it at half a pip, and this time I'm going to sell the Eurodollar. Okay. So I've sold the Eurodollar. In this case, it was like $2,000 worth of Eurodollar. Doesn't matter. In this case, I'm long the Eurodollar, and now we're just, of course, going to be waiting forever to see if we can clear the spread and make our first target. Because I wanted to show you in principle how the ability to manage stop to break even with a short exit is very easy with this thing because it's automated. Of course, of course now it just stalls completely. But let's just let's just give it a shot. And if this doesn't work in a minute, I'm gonna go to indices and I'll show you how this is done on indices, which is much easier, much faster. Matter of fact, let's do since I am the index king. Okay, hang on, maybe this is gonna move positive. There we go. There we go. You see how that moved positive? Instantaneously, we sold half and we're at break even. I can't lose money on this position anymore. Like, obviously on this positive. Now this is an extreme example. Nobody puts a half pip target on the whole thing. But you see how that managed it and went to break even. And we can close this out now. And you can see how on the trading view, that's all got cleaned out. The whole trade got cleaned out, right? So that's incredibly cool and very, very valuable. But what I want to show you on this particular situation is that not only can you do market entries, but let's say you're looking at Eurodollar here. Let's just look at our TradingView chart, and you say to yourself, if Eurodollar rises above 104.85. I want to be a buyer. That's a big breakout move for the Eurodollar for the session. This is taking out the high of the session. I want to be a buyer of the trade. Well, look how easy it is to set this up. All we're going to do is, let's say we're going to say 10,000, same 10,000 units. We're going to hit the reset button. All we're going to do is we're going to say 1.0485, right? And we're going to put a 20-point stop on it. A 10-point first target and a 20-point second target, right? All we have to do now that we've put a pending price in here, we just hit the buy button, and suddenly this now doesn't become a market order, it becomes a pending order. And it's just sitting here, ready to trigger. And when it triggers, and if it goes up and it moves 10 points in the money, this trader will automatically sell half and move the rest to break even, right? And more importantly, this is the other cool thing. So this is one thing I forgot to show you. So let me cancel this. Let's go just market right now into the Eurodollar. I want to show you something very cool. So I'm going to go market into the Eurodollar, right? And it shows the target, take profit, and the stop, right? Now let's say you say to yourself, you know what? I think the stop is too tight. I think the stop needs to be moved. Instead of you fumbling around, you could actually change the stop after the trade has already been in. You're already in the trade. You can just go to 30-point stop, go 30, and boom, instantaneously, if you go to your trading view, you see how the stop has moved to 30. You're able to control this super quick with a flick of a button. So my point to you is this: every one of you guys who's listening to this may not have the TradingView integrated into your Eightcap account. If you do, that's great. I'm happy. I'm very, very happy for you. And we will be soon giving you the ability to have access to this MT5 tool to integrate MetaTrader 5 together with TradingView. If you are not, like if you have an MT4 account, or if you have an old MT5, the key thing about using TradingView and MetaTrader 5 right now is you actually need a brand. So let's just say, by the way, look at this. I can close this up, right? I can close this up, and I sold half. Now I'm at break even. Okay, my stop loss is. Let's close this up. Is that correct? No. I'm going to hit this over here. I sold half manually. My stop loss goes to break even, and I can manage the rest of the trade automatically. Look how cool that is. Look how cool that is. Now you can actually see the stop loss is at break even right over here. Okay, and I made like 4 pips. So you could use this to do all sorts of scalping, fast trading, or long-term trading, positional trading, whatever you want. I can close this now completely. If I hit the close button, now the whole trade goes away, and I've made my money. So you can see, I think I started out with like 110, and I made 115 today. So it's, you can see how I made money in real time with the super clipple thing. So my point to all of you guys who are listening right now is that we are going to make this applet available to anybody who opens up. You basically all you have to do is, if you already have an MT5 account, you got to open a brand new MT5 account, just transfer your money from one account to the other, and you will have TradingView integration, and you will have this applet that allows you to trade MT5 to TradingView. If you don't have an MT5 account, open a brand new MT5 account. If you don't have an Eightcap account, open a new fresh MT. Anytime you're going to open up a new account in MT5 and TradingView right now, it will be automatically integrated into TradingView, and this particular applet will be able to trade for you. The trader applet is going to be able to trade for you. So that's my final offer to you guys today, is that the ability of this incredible platform to give you the analytics, the proprietary indicators, the scalp, the all sorts of stuff that you want to do in it, in combination with the kind of lightning fast granularity of trade execution that MT5 provides. You combine the two on the charts, and you have the best of both worlds. And we're going to offer this for you. All you need to do is make sure you have a brand new MT5 Eightcap account. Now, the details of how to get this, we're going to be working out in just a little bit, but I just wanted to preview this, and I wanted to obviously promise you that you will be all having this. This applet is going to work with Eightcap. It's going to work with Eightcap only, so you don't need to have an MT5 Eightcap account, but the ability to have this MetaTrader 5 to TradingView full integration is going to be, I think, really interesting. So that's it. Now I'm going to leave you, open it up for questions, see if there's any questions from you guys. And you guys let me know if you guys like this. Nope, sounds like everybody really enjoyed it. Again, if you really want to trade the way we do, this is what you need. You need this tool, you need TradingView, you need the ability to visually see the market so you can make the best trades possible. And then you need this MT5 applet to make sure that you have your risk control and your management all set up for you, so you don't have to think about it in the heat of the battle. All of it free for you. So let me know. Thank you so much, guys. If you guys want to join us, go to bkforex.com and just join us, and we will, gladly trade with you every single day. Yes, so if you have an old one, all you got to do is just sign up for a new one. Contact your customer representative at Eightcap and say, I want a new TradingView MT5 account. They'll set you up, and once you have that, you can get access to the applet, and you'll be all good to go. Yep. And this is all being recorded. It's all going to be sent out to you guys. I hope you guys really all enjoy it. And I want to thank you very, very much. And I'll see you guys in the markets. Take care.